If you've been keeping an eye on energy markets lately, here's something that might catch your attention. Natural gas prices just ticked up on one of the world's most influential commodity exchanges. But here's where it gets interesting. What does this mean for consumers and industries relying on natural gas? Let's break it down. On September 3rd, 2025, at 9:20 a.m. UTC plus 4 hours, natural gas futures saw a notable uptick on the New York Mercantile Exchange, better known as NYMEX. According to a report from APA Economics, the price for October delivery contracts increased by 0.37%, settling at $3.001 per million British thermal units, BTUs. For those unfamiliar with BTUs, they're essentially a standard unit of measurement used to quantify energy content in fuels like natural gas. A slight rise may seem small, but even minor fluctuations can have ripple effects across industries and households. Now, why should we care about movements on NYMEX? Well, this exchange is a critical hub where buyers and sellers come together to trade commodities such as natural gas. Prices set here often influence regional and global markets, affecting everything from heating bills during winter months to manufacturing costs for businesses. And this is the part most people miss. These shifts aren't just numbers on a screen. They represent real-world impacts felt far beyond trading floors. But let's zoom out for a moment. While natural gas prices were climbing, other developments were unfolding in the broader energy sector. For instance, oil prices took a dip amid growing anticipation around U.S.-Russia talks concerning Ukraine. Meanwhile, Kazakhstan signaled its potential return to transporting oil via the Baku-Tbilisi-Ceyhan pipeline, a move that could reshape regional dynamics. These interconnected stories highlight how volatile and complex energy markets truly are. Here's a thought-provoking question. Do rising natural gas prices signal a looming challenge for renewable energy adoption? Some argue that higher fossil fuel costs incentivize investments in cleaner alternatives, while others believe it creates short-term economic burdens that delay progress towards sustainability goals. What do you think? And speaking of controversy, there's also debate over whether infrastructure projects like Azerbaijan building the region's largest battery storage systems will be enough to stabilize energy supplies amidst fluctuating prices. Could innovations like these counterbalance market uncertainties, or are we still too dependent on traditional energy sources? To stay updated on these pressing issues, consider following reliable news outlets and industry updates through platforms like Telegram, Instagram, TikTok, Facebook, or X, formerly Twitter. Links to these channels can provide valuable insights into ongoing discussions about energy trends and their implications. So what are your thoughts? Do you see rising natural gas prices as a temporary blip or a sign of larger systemic changes? Share your perspective in the comments below. We'd love to hear from you.